All right, we'll get going here. Good morning. I'm Stephen Pring with Pring & Associates. Pleased to introduce our next speaker, Flotek Industries. Flotek is a technology-driven specialty chemistry and data company that serves customers across the industrial, commercial, and consumer markets. Flotek is driven by research and innovation, and its mission is to partner with its clients to provide performance-enhancing technologies that add value to their customers' assets and bottom line. The company is headquartered in Houston, Texas, traded on the NYSE under the ticker symbol FTK. And here to tell you the exciting Flotek story is Chief Executive Officer Ryan Ezell.
Thank you, Stephen, for that warm introduction, and thank you everyone for attending today for the Flotek session. And I also want to thank Larry Busnardo and the EnerCom team for the opportunity to talk about Flotek. And this is actually my first event as the new CEO here at Flotek, and I couldn't be more excited about the opportunities and the transitions going on inside the organization. And we're going to walk through a lot of that today and why I think that we're a fantastic investment story, and we present a compelling story to the market for not only our customers, but also for the community and the world entirely. So when we look at Flotek, we've been around since 1985. A lot of you have probably heard about us. We've diversified over the years from different services, but what we've always been at the core is an innovative chemistry and data and technologies organization. We're based out of Houston, Texas, and as Stephen said, we're traded on the New York Stock Exchange. Our corporate office in Houston is also where we have the majority of our laboratory work, but we also have facilities all over the United States. We have an entity in Abu Dhabi. We do work in most of the GCC countries in the Middle East, and also we have quite a bit of work ongoing in Latin America. So when I look at Flotek, we fundamentally look at us as a purpose-driven organization. And what do I mean by that? Is that when you look at energy as a whole, it's required globally. And every single human activity is powered by energy. And energy, no matter what form, has an impact on people and the environment. And this is where Flotek comes in, is that we are the collaborative partner of choice for innovative chemistry and data analytics solutions that reduce its environmental impact on air, land, water, and people. And this is a compelling value proposition in our minds because we do feel like no matter what diversification of energy you look at, we're going to be there to help give the proper solutions and drive innovation going forward. When you take a look at where we stand on a lot of the strategic priorities here at Flotek, there's no doubt fundamentally we drive innovation. That's a core component of what we do. We have over 170 intellectual property patents around chemistry and data analytics platforms. And leveraging these inside the market today has allowed us to create a massively improving sustainable revenue stream. Particularly, we have a $10 billion backlog of revenue from a new innovative partnership with ProFrac, which is one of the nation's leading hydraulic fracturing companies. But we're also continuing the diversification of our data analytics business, which is getting a lot of recurring data as a service components in the upstream and midstream markets. In doing so, we've realigned the blocking and tackling of our organization to look at enhanced profitability. We are fundamentally driving business improvements across every aspect of what we do, and that's gaining a ton of momentum. And you can see this over the past 8 quarters of our continued adjusted EBITDA improvements and also significant gross margin improvements. We focus on capital-light growth. We feel that where we stand in facilities and infrastructure, we can continue to substantially grow our revenue and our profitability over the coming years without any major investments in that area. We maintain a very strong balance sheet in that we have essentially zero debt. We just announced yesterday the closing of a new ABL facility for us, which will help maintain liquidity and working capital to help fund our growth that we're seeing at a rapid rate through what we ended in 2022 and through 2023, and also what we're forecasting to go into 2024. And most importantly, we stand around our environmental stewardship and environmental leadership. We like to consider ourselves people that help make the handshake between total cost of ownership in energy markets and environmental cost of ownership. And these help drive the strategies around what we do in the backgrounds of how we perform in the markets. So I mentioned Flotek being a compelling investment choice. When we look at it in terms of, we've significantly improved every aspect of our fundamental business execution. We have a brand new leadership team in place. with myself, Bon Clement, our new CFO, Nathan Snoke, Shane Wise, a lot of new experienced operators that come from across a diverse multidisciplinary approaches in the business. We have complementary business segments in our energy chemistry part as well as our data analytics, which has driven significant growth, which we've seen over 60% annual revenue growth. And when we look at it, more importantly, is we're driving significant improvements in profitability, where year on year we're going to have over a $20 million gross margin improvement as we continue this transition and transformation of the business. As I mentioned earlier, it looks really bright for us as we have over $2 billion in backlog revenue as part of our contract with ProFrac. Looking at our second quarter highlights, again, we had 108% growth in gross profit as compared to Q1 of 2023. We reported positive improvements in adjusted EBITDA for the 8th consecutive quarter, and we also are seeing strong revenue, just overall 72% versus the second quarter of 2022. And for the first time in over 7 years, we continue to reiterate revenue guidance for the full year of 2023 between $210 and $230 million. And we're also giving guidance around our adjusted gross profit of 8 to 10%. And what this does is fundamentally provides confidence in the direction that Flotek is going and the significant improvements that we've made on our fundamental business properties of how we execute. Now, looking a little bit more around our revenue growth, every aspect of our business is improving. You know, when we look at it from our transactional chemistry business, what we're doing in our relationship with ProFrac, and also on the data analytics component. And what's very unique is if you look at our transactional chemistry market, that's related to our prescriptive chemistry management, which is the way that we differentiate inside the market. And I'll talk about that a little later on in terms of why this is important in helping our customers improve the value of their assets. We also, over the past year, we've grown from less than 1% market share of active hydraulic fracturing fleets where we deliver chemistry to over 10% in the last year, which is massive market share gains, which is helping, exemplified how we're seeing our revenue growth. And we're continuing to see this grow even whenever you look at some of the headwinds we've seen in the hydraulic fracturing market here in 2023. But we're very confident in our continued position in the uptake of our prescriptive chemistry management model and also the momentum that we're seeing in the data analytics business. And transitioning and looking at data analytics, this is part of the future for Flotek, in that we've been fundamentally strong in sustainable chemistry for over a decade. This data analytics measurements also help us turbocharge our look at chemistry as we look at near-infrared measurements that help drive improvements, and we look at natural gas transmission monitoring, chain of custody verification, and also some unique things that we do in terms of BTU and field gas quality that are giving power generation for rigs and hydraulic fracturing fleets. Currently, we have over 20 units deployed in the upstream part of the business, looking at protecting units and also providing optimal running characteristics for these hydraulic fracturing fleets for efficiency. And probably the most exciting thing around the JP3 business is, one of the, I would say, growth mechanism issues that we had in prior years was we had a very limited supply chain, which was not helped by COVID. But what we've done is we have now diversified our manufacturing base, and we've reduced the cost of our units by over 70% going forward. And by the end of this year, we'll be able to have mass production and adoption of the units into the field. We look at, one of the, I would say, core things that we've talked about for years here at Flotek is around improving profitability. And for us, we had to readjust our business models when we look at the full cycle delivery of chemistry and data into the field. And because we've done that, we've really leaned up the operation, brought in world-class supply chain operations, improved our logistics, and delivered a lot of what I would call efficiency in operations that has improved every aspect of our game. And you start to see the enhanced profitability going forward. And we're again, giving guidance around this at 8 to 10% gross margin for full year 2023, which will represent an over $20 million improvement year over year on profitability to the company. It will also put us into generating positive adjusted EBITDA by the year end, which will be the first time in over 6 years that we've seen that here at Flotek. So again, talking about the transformation and the momentum that we have going on inside the organization. And this is just a graph where we're tracking along, and you've seen the continued track of improvement over the past 8 quarters. And again, the big thing to note here is we will move into positive adjusted EBITDA in 2023 and look to see that growth continue in the coming years in 2024. Let's talk a little bit more about our segments. I mentioned we've got very complementary segments in terms of our chemistry technologies and data analytics. And what makes these unique is that we've acquired this data analytics group with JP3 to help enhance the chemistry background that we've had, where we've delivered on over 20,000 completion wells worldwide. And this has allowed us to do not only bring in, I would consider to be AI, advanced learning, and digital twinning on how we apply chemistry in the field, but more importantly, reduce the overall chemical treatments that we put down hole and improve the efficiency of the well and give better uplift on the initial 12 months than what's seen when we compare it to other competitors out in the market. And also, we look at the complete innovation that we see with data analytics. If you look at what we want to do from a sustainability platform, our ability to run, give BTU quality measurements, look at chain of custody measurements, and actually move into real-time treatment into production wells are all these types of applications that JP3 will enable Flotek's chemistry in the future and help diversify our revenue stream, improve our EBITDA stack. And we also look at where we can diversify into other industrial pieces around the chemistry business, which will be fantastic for us in terms of sustainability of the organization in the long term. Now here, again, I mentioned around where we've got strong presence at all major basins here in the U.S. We also have a very strong international presence, and here recently just had our first slick water hydraulic fracturing system approved in Saudi Arabia. It is only one of two currently operating slick water fluid systems in the kingdom. So we're really excited about that. That was a 2.5-year approval process with the XPAC ARC. So again, showing how we continuously differentiate us around innovation, efficiency, and reducing environmental impact of this chemistry application. Here's just a snapshot of all the basins that we currently deliver into here in the United States on the chemistry and data components. And I would say, our strong pieces around the DJ, the Mid-Con, both Delaware and Midland, and the Permian, and then also what we're seeing in the Eagle Ford and South Texas. Now, we've seen a little bit of drop in our activity in the Haynesville, which is just related to the market conditions, as you've seen some of the activity slow down with the pressure on natural gas pricing. But we do feel in the long term that'll return back, and we have a very, very strong market position in the East Texas area. And just overall, kind of a look at where our applications go across. We're really, most people know us in the stimulation part of the business. And again, you grow where you know. As we've been doing the transformation part of the organization, we've really focused on our prescriptive chemistry management. Those are typically 12 to 18-month pursuits that we do, and we're really starting to see the fruit and the benefit there. But when you look at the future for Flotek, you look at what we have for our surfactant technologies, our complex nanofluids, a lot of the scavengers and unique small molecule chemistry, our ability to work our way into production chemicals, which gets away from the volatility of the rig count or hydraulic fracturing fleet counts, are great for the long-term component of the organization. And also, when you look at particular wellbore clean-out, cementing additives, and different applications, we're seeing growth in those areas too, which again is attributed to the overall approach to business of being a full-service chemistry company and creating value through those platforms. Now, this is probably the most exciting slide I'm going to show today. When we went out and we've done almost a 3.5-year study using publicly available data, we targeted, in this case, just the Permian Basin, and we looked at over 1,800 wells completed since 2019. We narrowed down the searches in terms of lateral length, proppant intensity, different things that helped where we had more of an apples and apples type comparison, and we segregated out where Flotek chemistry is used versus when they're not. And what we see is when prescriptive chemistry management is applied and you look at the return over the first 12 months, we typically see on average 26% uplift improvement when everything else is considered the same and you use or don't use Flotek chemistry. So there's definitely a differentiation in what we do. And what makes us different here is you go all the way back to the laboratories that we take detailed core and cuttings analytics. We look at X-ray diffraction. We look at different production samples from the crude or gas. We look at the connate water, what water we're going to pump down hole, all those different components, and we match up specifically what shale inhibitors work, what friction reducers we use in terms of return permeability or reservoir response. We look at all the different components that could potentially drive improvements in the reservoir and return on the value of spending for chemistry to get better uplift and better performance. And again, we've seen this time and time again. This is just an example from the Permian Basin, but if you go look in the Mid-Con, you look in the DJ, we've got same data for all the different ones. What's even more important is if we narrowed out specifically ones where we apply our proprietary complex nanofluids, that number moves from 26% almost to 31%. So again, showing the differentiation of the technology and that there's proprietary needs of what we do from the engineering side that deliver this performance. And also, what I'm even more excited about is, upon coming to Flotek, if you holistically look at how do we make the most out of our intellectual property and the laboratory horsepower that we have, and where could these technologies be used in other markets in terms of where we produce energy. We look at other industrial applications, geothermal, agricultural, solar. We're actively selling chemistry into all of these now and generating revenue. We make solar panel coatings that improve transmission and reduce deposition of dirt and dust. We have different adjuvant chemicals that we sell into the agricultural market that improve the efficiency of fertilizers, give time release, adjust surface tension of pesticides, a lot of things that we use to help improve the agricultural market. And we're working with some of the largest geothermal drilling and operational customers in the U.S. right now. And it's really exciting times for Flotek in terms of we're making full use of the current technology and assets that we have while we're taking a forward look on the 5 and 10-year technology horizons at where we need to be innovatively to continue to grow and diversify this company. Real quick, I talked about the data analytics segment. And when you break this down, what is it? It is a set of hardware and software that we have that, one, is proprietary in terms that we take near-infrared measurements at location. They have the same accuracy as gas chromatography, but yet is mobile and can take this in real-time applications. So we can actually place a unit. You see some of them here from in the field, and they run straight off the stream. It can give you a BTU count, a hydrocarbon breakdown, or any of these type of relevant near-infrared measurements in less than every 5 seconds. So this allows, when you look at transmix operations, you look at BTU protection in terms of power generation. All these different components is what JP3 works with. We can even put them on manufacturing in terms of when we're seeing different manufacturing processes come to completion on the chemical production side. A multitude of opportunities where we're diversifying when we look at, and we have a 5 and 10-year roadmap. It has 6 different levels of strategic applications of JP3, and we're just starting to scratch the surface. We're on level 1, and we're starting to see massive uptake in the upstream, and we think this is a multi-billion-dollar market that's untapped in terms of being able to do what JP3 can do on location. We put these units on hydraulic fracturing trailers. They take them down caliche roads, and when they get to location, they're robust. They don't need much calibration. We've had them in the field for over 10 years with minimal R&M. And you're looking at it comes at 1/3 the cost of gas chromatography, and it doesn't need auto sampling. This is a true differentiating technology in terms of how we look at chemistry applications in the field. And whenever you look at it across, we kind of subdivide out, which isn't a surprise, the upstream, midstream, and downstream. Where JP3's had its most success so far has been in the transmix operations, and looks at the interface as they're flowing things through a pipeline. Where we've really started to gain a lot of traction is in the upstream markets, and we're really excited about that because what we see is a synergistic pull. Chemistry has always been strong in upstream, and we're utilizing that momentum to pull our data analytics growth into the upstream, whereas data analytics has traditionally been strong in midstream, and we're wanting to pull the chemistry to the production platforms and automate this whole process. And so it's really exciting and where we're going from a diversification and our innovation and how we go to the market. And like I said, I couldn't be more proud of how these technologies are being adopted in the field. Now, who are some of the big customers that's currently using JP3? We have over 635 measurement points inside the United States right now that are actively looking. All these green dots represent measurement sites that we see inside the U.S. and operate inside of our Viper software that you can pull up on any app. We can read hydrocarbon content. We can read BTU qualities, energy composition and quality. And this is phenomenal data to be able to have. Not to mention, we have a proprietary database that has over 50,000 crude samples. So when we look at the algorithms to calculate accurately what is flowing in production lines, we can do this in a matter of hours, where sometimes, you know, these compositional data could take up to a week to do. We can do it in less than a day. You know, I mentioned around liquidity. We closed, the announcement yesterday, we closed our asset-based loan, which will provide $10 million on our AR, and it has an accordion feature on some of our real estate, which will allow us to extend up to $15 million. This will help drive the liquidity for how the rapid growth of managing our working capital going forward. And wrapping up, you know, again, I come back to the fact I really am excited about Flotek. It's a compelling investment story for us in that we've got strong leadership, we have a lot of momentum, we have innovative, differentiated technologies that are fueling growth that's outpacing the market in terms of not only market share but also revenue growth. And most importantly is that we look at answering that big why of answering energy diversification and how we can minimize, no matter what vertical is coming in, its environmental impact of how it works with air, land, water, and people. And so we're really excited about it today. And again, I appreciate your time and thanks for the opportunity to present here at EnerCom.